This is Justin Pulitzer. This is my weekend review video for Sunday, February 12th, 2017. The new year is starting to fly a bit. All right, so let's get into the 7 market keys. I always have a couple of pepperings worth of stocks that go in with that, sometimes that key in with the indices. Then we will get into the indices themselves, some of the Fed day range stuff. Then we'll get into some of the momentum stocks and setups of interest that I see. First and foremost, I did a sentiment gauge. It's running roughly about 59% bullish, the rest bearish to neutral. It was actually the exact number was 40% up, think up, the next 5 points in SPY, 27% think down. Neutral but leaning higher or up was 19%, and then neutral and leading down was 14%. So sentiment is improving a bit, but it's not at crazy euphoric levels as of yet. As far as the market keys go, the VIX did have a sub-10 print. I've been discussing the likelihood of that happening. In 2007 that happened right before the the beginnings of the financial crisis. I think that the circumstances these days are a little bit different given all the Fed QE that we've seen and the accommodative monetary policy and some of the new policy and fiscal policy initiatives that are coming with the new Trump administration. But I am mindful that this could be it could be some choppy waters going forward. We are at the lower end of the range, which means we are in pure directional play. I have created this key here in the past where how I sort of gauge volatility and how to handle it, and we are in pure directional play mode. The 50 MA here has kind of been a couple of issues the last time. I would say if we got through the 50 again, I would think we could see the 200, maybe a backside of this old potential switch in trend, but until then, it seems as if we're kind of in this ho-hum period of volatility, although I am expecting this to maybe kind of do a bit of a one of these like rounded bottoms where this kind of marked the low. It was revisited a few times, but then there was a move up. So this might have marked the low, and we could start seeing maybe we do see a little bit lower, but we may start revisiting for a move up higher in volatility. A few things that I'm seeing, we'll get to that in the indices, that some are encouraging, some are a little more warning, but we'll cross those bridges when we get to it. The dollar is holding this neckline area. We had a bit of a look below and fail, so I think the risk in the short term with regard to the dollar could be up. I've talked about a potential head and shoulders pattern. What does disturb me a little is that a lot of people are seeing that. That can sometimes be good, it can sometimes be bad. The good about that, though, is that it's at a very defined level, as in the uptrend here. So if the dollar does keep bouncing, that could be a little bit of a problem short term for commodities. Also, it's pretty bombed out stochastically, and it is starting to bend back up. So the dollar is due for a bit of a bounce, and these look below and fail patterns tend to be quite powerful. I am mindful, though, that the 50 MA is coming up, so it could be a lower right shoulder, which, of course, is always the most bearish. I'd be a buyer at least the first time around the channel low in the 200 MA if this were to kind of fall back down for a bounce play. But in the short term, the dollar is looking like it is in bounce mode. So keep that in mind if you're looking at commodities and potential turbulence in the market. If this does start really crossing over the 102s, then I think there's going to be there could be danger of the head and shoulders pattern failing, and then we might be looking at the 109 scenario again. But as of right now, the dollar is softening, but in a bounce pattern within the context of a potential topping pattern. So we're going to have to see how that plays out. That's very, very important. The bonds bounced. We got to the 2009 crash peak, pulled back to a higher low, and now we're threatening to get over a downtrend here. The key level to me here is, again, the Fed high of day, the 119.21. We've had a few looks in there that have failed. I don't think you'd want to see that again. 50 MA here is also starting to flatten out. So if you want to play long in bonds, I'm kind of fine with it on dips as long as the 50 MA and like trend holds. I think that this pattern might be dicey, but it could be in a bounce type of a bounce type of pattern here. And this should not be green. It should probably be yellow. I like to use that for kind of tentative trends. We had a bit of a look above the triangle that failed. We may come back down to retest the low, but if it does still hold the Fed day low particularly on a closing basis, I'm fine with kind of buying dips. The calls in here are pretty cheap. Probably could do it cheaply with some call spreads. HYG, this should disappoint those that are looking for a calamity. This was an inverse head and shoulders, and now we're kind of in a bit of a, I don't know, cup and handle phase where this could be the cup and this is the handle. I'd be a little leery if you start losing the 50 MA. You can see when we broke it here the last time that led to a cascade. So I'm going to say buy the dip as long as the 50 MA holds. If the 50 MA fails, then we see the 200 MA. That is, that's the scoop. If you start getting over this recent high here, this could start floating still higher again. One of the stocks I've been looking at, this was brought to my attention by a longtime follower, is this PML. This just went ex-div and is pulling back. It basically got close to a gap fill and a 50% fill. You can see it's in a bit of an uptrend. I think somewhere between this uptrend line and the 50 MA, you can see here the 50 has been important in the past. So, and it coincides with the gap fill. I'm down with a row long at the gap fill. This is like a 6% dividend or distribution. So really kind of be careful, because if you start losing trend and losing the 50, this could really collapse a bit. But I do think that this area is worth a right out long for a tester, for a trade. With regard to the commodities, oil. So I had teased this up a bit, and I'm going to go over this now. I had some hot disputes this week with people saying that, and I'll show you, that this was a head and shoulders pattern, this being the left shoulder, this being the head, and then this maybe being a potential right shoulder. And I didn't buy into that. I said this was more of a look above and fail. And then you had these look below and fails, and then this was now another look below and fail on some pretty bearish inventory data. So we'll get into that in a moment. But why did I not buy it that it was a head and shoulders pattern? One is that this is not a built-out left shoulder. This was also a look above and fail that kind of just came back down. And this was the same. Why not a head and shoulders, though? There was no time spent up here. There was no real build out of the multiple days like this. Look how this was built out as a rounded top. And you see this, remember when I talked about this being a potential head and shoulders that failed now to the upside? Look at this build out. We spent so much time here. This was a built out head. This was now a built out potential right shoulder. And this pattern failed to the high. So it seemed unlikely to me that these like little mosquito bite spikes were going to negate a failed head and shoulders pattern and without really building out time. So this was a look below and fail of trend, and now we're back up. We're still in a consolidation kind of sideways pattern, so I really need to see how this is going to play out. But as of now, it's sort of the status quo. You have higher lows. You've had look above and fails and look below and fails. You really need to see how the range plays out. The most encouraging part is that this happened on building in rig counts and building in inventory, and it seemed to me that I think, I've seen a couple of studies that say that the market is at record highs in terms of long inventory, but it seemed to me that so many people were looking for the short. Right now, I would say 50 MA is the key. The 200 has been very, very key with look belows and fails, and it's kind of coinciding with some big Fibonacci levels. So I'm going to kind of say that if you want to play long, you could buy stop this over 54.34, which was this, I guess, would invalidate the mosquito bite right shoulder. Anything over there, I think, would see the channel high up and get the gap fill up to 56s. If you start losing the 50 MA, it might be more of this chop, and there's always the risk of, an actual breakdown to the 50 MA and these Fibonacci levels. I think that the fib levels would be buyable. I don't necessarily know that it would be a bigger topping pattern. To me, it would just be that oil is kind of found a short-term supply top, and I would be more interested in buying dips in this. I'm not really as inclined to kind of short oil here. XLE, this has been a rather interesting consolidation pattern. You've had some look into the range that failed and now back up, but we're still kind of in the throes of a consolidation pattern. Friday was a doji right at the 20 MA, which was, you could see, was kind of key here, and we had a bit of a look below and failed the 100 MA. So what's the scoop? I want to either see the 20 MA break for a move higher, or the 100 MA now break again for the move lower. So you're kind of caught between the key levels here. So I like Friday's range. If you're aggressive, you could take it long over Friday's high, or if you're aggressive on the short side, you could take a long through Friday's low and then see how it reacts at the 100. If the 100 snapped, you could always add to the short. But Friday's range to me would be key for the XLE. Exxon Mobil has been the key. In my view, it's been a leading indicator. This softened way before oil did. You've now had a gap down with 2-day consolidation, and now you're over the 2-day high. And this was after a multi-day consolidation, basically a gap down close to the 50% fib. And I've talked about this 81 to 83 level being key. It was very key in the past, and it seems to have held for the most part. We're still below the 10-day. Until we get above the 10-day, it's hard for me to say the pattern is really turned, but I think this just kind of got oversold and traders took the gap down as an opportunity either to cover or to buy. If this were to rally to like the channel high, look, that's the backside of the old downtrend line and close to the 85s and 86s. So this Exxon could be in a bounce phase, but I don't know that the decline is, fully over. If it were to continue down, this 61.8 to me would be an area to get way more aggressive in terms of selling out of the money premium. Probably puts down in like the lower 70s, I would think. But this day's range to me is key. So anything above 82s to me is okay. If we were to now eclipse this low, I would have to think that we would get a full articulation lower of the washout down to like this 77s and 78s. Where at that point the thing would be so heavily overdone, I'd be interested in getting more aggressive in terms of selling out of the money puts. I've begun that process small and would be adding consciously. Now, someone might say to me, oh, but you're adding to losers. No, it wouldn't be, because that's part of my plan, that I'm kind of fishing for the bottom at Fibonacci levels after realizing something is so overextended, and it was part of my plan from the beginning. I think the adding to losers is when people buy and then it wasn't their plan for the thing to potentially go lower and they're in kind of at max size. I'm starting out small, and fully part of my business model, part of my business plan would be to add lower. So it's sort of feeling for the bottom, if you will. On a play on momentum, back over this like 84.16, then I would think that we would see the 85s and 86s soon in that order. If you want to draw this as a longer term, like kind of a consolidation down play, you can see that coincides here. So like, I don't know how much more down there is. This could be a false bounce and we're going to go lower, but I think that we're kind of getting close to areas where there could be some more support. A little long story short in Exxon, but I am looking to kind of start selling the out of the money puts in the Exxon, and I've begun doing so in small size. FXI starting to perk up. Trump is starting to be okay with the one China policy, and I guess that is a little bit of relief for the market. I don't know that I would chase this here, but I would be a buyer on trend. Now that we have trend and we're above 100 MA, the 200 MA had been very difficult here, and now we're firmly above it, which is good. We're firmly above trend. I think that there could be a rally to this old reference high, which, look, coincides with the backside of the old uptrend. So in short term, I don't know that the FXI has really turned the page yet, because we are still below the old channel. but I do think that short term you could buy the dips for a move back up to those old highs. The BABA. This stock just never cooperates and makes it easy for people. Look at this. It broke the trend kind of more by time than by price. Then it rallied and stalled at the backside of the old trend. And to me, the key here seems to be the 10 MA. Look, we got above it here. It held here, right? And now we're back below it a bit. Now we're back above. I think the 10 really needs to hold. If you were to get, here's my scoop with this. Above the 3-day high, the high here is 104.18. I think the play is long. If you get back below this now, this 101.16, this would be a lower high, and I would think we would articulate lower to fill the gap. So that's my scoop with BABA. IBB is starting to perk up a little bit. Interesting here. We've broken the trend, and it seems like this could fill the gap, fill up the triangle back to some of these recent highs. So the 10-day to me is the key here. If you can hold the 10-day, I think higher. You've got to really hold this breakout. If you start getting back below this, and this becomes like one of these look above and fails, we've had one here, you've got to be a little cautious. What makes me think that it might not be is that here you had the look above and fail, looked below and failed, and rejected higher now to new highs. So I do think that this is starting to get its act together a little bit. We'll have to see. You have a lot of moving averages below. It's been very hard to press it below there. So this, to me, looks like it could be, for the first time in a long time, maybe starting to perk up. We'll have to see how that, if and when that does play out. Maybe we are starting to get a trend change, like it's sort of a bigger rounded bottom, and it's going to start going higher. But I think you could use this gauge, this trend, as the gauge. Above it, I like long. Below it, I don't. TEVA. This is an interesting play. I had discussed this the last time. It had made the low on the 61.8 in the after hours. I had gotten long, and we promptly got this move lower. We got the gap. I had said last week I like that. I love when I get into something and the next day it's kind of up. We've had multiple days of consolidation, and then there was news down, and it's just been kind of futzing around down lower. This stopped me out of the short. I had done this with a risk reversal call spread. I had been short puts and long call spreads, and I stopped out of the short puts. I still have the call spreads on, but if we get below this like 31.90, I'll just probably stop out of those and just chalk it up to some bad biz. But I do think that this is probably trying to bottom at some point, but it might be harder to time. Gilead, I have not been positive on. I've been saying that I thought that we could see a little lower. So what now? You had this gap down, and it's getting close to a reference low and a big 61.8 lower. Head and shoulders top, by the way. This is, when people talk about head and shoulders, look how built out this was. I mean, that's a really, truly bearish pattern. Anyway, that being said, I'm starting to, I'm looking for the long. I'm either looking for it down by the 61.8, or I'm looking for it either above this high. You have a 3-day consolidation. Short term is this. I either like it long above 67.27, which was this high of day for the gap fill, or below the 3-day low. I like either short term short for a move lower down to 63.5 and maybe down to 57.78. But down here, I'm going to start looking to sell some out of the money puts, or even buy the stock for a longer term play down near the 57.78. It's possible it's undercut a little bit, but I think that area really would be, the thing is down so much, it would be interesting. So like I said, short term short below the 3-day low, or short term long above the 3-day high. That may build out, the range may consolidate a little bit more, but that is what I'm thinking. As far as commodities go, I've been bullish on silver for a while, and we are now into the 200 MA. This was support. It technically should be some resistance. I think that there could be a little bit more up to the 50% fib, which coincides with the downtrend line, the primary downtrend line. So around 1728 is really where I'm looking to start booking some profits. Maybe even if you want to try a right or right out short, but I do like this pattern. This is an inverse head and shoulders with a neckline snap. I do think that there could be a move still higher to retest the backside of the old uptrend line. But this area, to me, would be interested in maybe short-term booking some profits. Gold starting to roll over a little bit here into some reference areas, but this could have a little bit more room to go also. I like it on trend for right or right out, which coincides with the 20 MA. If it snaps, GTFO. Shorter term, look at this where the breakdown took place from, the 100 MA. I like that we're checking back to it. So if you're aggressive, you could either be short below Friday's low or long above Friday's high. I like Friday's range considering it's the 100 MA. With regard to GLD, this Cliffs Natural is just a commodity stock. This had a big gap up. We took back about half. If you're aggressive, short below Friday's low for a further rollback. Or when I see professional kind of gaps like this, potential, I get interested in kind of buying above the high. So I would be trying above Friday's high and then adding over Thursday's high. So that's one quickie in a commodity stock like a Cliffs. S&P land. So there's a couple of things I'm seeing that are interesting. Let me zoom in. We are, zoom in even further. All right, so we're in a channel, a really defined channel. Look, we've ridden channel highs before, right? They've usually led to these bigger breaks, consolidation, and then break again. Again, up here, we kind of touched the channel high, consolidated, didn't have a larger break, and now kind of back up. And look, we're above these highs, this old high, and this recent high. Remember I had talked about, this just does not make it easy, right? Let me zoom in here. This was this sort of, I don't like this time zoom, but I can get down with this one. Look, we had this gap up here. You had a couple of days of consolidation and a gap down. This should have been a bearish pattern, right? And we should have gone lower, maybe even to the 50 MA. But we spent a multiple days of consolidation, and then you had a gap up with multi-days now again of consolidation, and now a move higher. This is sort of like in a channel within a channel. The bad news is that we're getting close to the channel high and closer to a longer-term 1.618 Fibonacci extension and the 2 times of the range, which I said was closer to 233.95 and 234.03. So we're getting kind of close. So we could go still higher, but the amount that we may go higher could be capped off a little bit. So kind of short term, there's still some room, but longer term, we might be getting a little bit extended. That's just my view. This week, the what to me would constitute a big failure here now. Anything back below 229.71. Like if there's a check back and it goes back up, it's fine. We've spent a lot of time consolidating here. I know everyone thinks the market is so overbought, but the 10-day is right here, the 20, the 50, and I mean the 100 and the 200 are pretty far, but the shorter-term moving averages are here. I do think at the very least, if there is some type of a larger pullback, that the 50 MA here is going to be I don't want to say the voice of reason, but it would be an area where I think it probably would get bought, at least the first go round. Because look, when you gap down here, the 50 MA was tons and tons of resistance. And now we're through it. We haven't touched it once in this entire time. So at the very least, if you're going to play, any playback, if you're going to try and short up here, the 50 MA might be a longer term target. If there was some type of a breakdown here back, but like for some reason there were a couple of days above here, and then we lost this low of 29.52, then I would be looking to target the lower end of the range in the 50 MA. But so that's what I'm thinking. Short term, maybe a grind higher. Longer term, maybe, or medium term, maybe a pullback eventually to the 50 MA. Listen, it's also possible we just go full parabolic, and this stuff doesn't matter, but it has mattered for a while. You can see this channel has been very defined, and after coming from the channel low and just kind of grinding up and then sideways and then grinding up again, this would be an area for me to book some profits given the place where we are in the VIX low range. The expected move this week is $2.35. Remember, I discount that to the upside, meaning that I think that limits the upside. The downside, though, always has more potential because the VIX would increase. If it were just 235, that's 233.86, which, look, is pretty close to the channel high. I'm sorry, the measured move in the 2 times range. The move down would be to 2. This can't be right. I have written down 299. I'm sorry, 2. No, that's not right. It must be 22.9. Anyway, just subtract $2.35. So you'd be back down into the breakout range here. Wow, that was a little mess up on mine. IWM, this to me looks pretty bullish, actually. I'll show you something. If the dollar is going to strengthen, by the way, that's always good for these small caps because domestic stocks tend to outperform. You've had this side of sideways consolidation. You never got to the channel low, which I was sort of thought would have been healthier if we did, but now we're back up. This is still in a range, so I have to assume that the range high is going to hold until it doesn't. So just be a little bit careful with that. And you had a bit of a doji on Friday. So above Friday's high, there's probably room for a little higher. Below the low, if there was like a gap down Monday, I think you could see the 50 MA pretty quickly. If you were to double this range, this consolidation range, though, that would take you up to, 144.52, or maybe even close to the channel high. So keep an eye. I've said also longer term, the 1.618 Fibonacci extension is up at 151. So this could do something like come up and just grind for a while. And this is not major pullback. This has been a lot of consolidation, again, more by time than by price. And it held where it really needed to. So watch this range if it can break. I'm a little cautious because we came up from the bottom, but we did spend a lot of time basing. So I do think that is a possibility. If you were to lose the low, the range would be to a gap fill potentially here. Like if this for some reason came up here, then came down and then snapped the channel, that would take you to roughly the 50% fib in the gap fill. So I am watching this range very closely. The one, what was the low here? 133.12, which of course I have here, and then the 138.82. So anything above should kind of double up the range, or anything below should kind of double up the range. That's what I'm thinking with regard to IWM. The expected move this week is $2.40, so 140.34 or down to 135.55. The Qs, this is getting to be interesting here. This is riding an upper end of a channel, and we're getting close to a couple of time frames, 1.618 Fibonacci extensions, depending on how you measure it. And I'll show you how I did measure it. If you use this big break here, that obviously gives you the larger one. If you use just this range here from this high to this pullback low, that gives you the lower one here. So, yeah, I'm a little cautious with the Nasdaq here. I mean, it could grind higher, but it is riding the channel high. I would be, of course, interested on a pullback to the 50 MA to the channel low if there were to be some kind of a break, but right now it's getting, in my view, a little bit stretched. The expected move is $1.43, so that's up to 128.81 or down to 125.95. And of course, remember what I said with regard to the move down. Fed Day, let me show you something else in the SPX. This is the cash index of the S&P 500. This is the big Megillah. So a few things to note. I want to just show this, the 100 and the 0. So look, if you take this entire range, this bearish consolidation, and you project the 1.618 Fibonacci extension up, look where we're getting close to here. It's 23.35.34, and we are up against a channel high. Look, if you draw this kind of up channel since the move, and we're now kind of in an up channel within an up channel, this is getting close to a very big end target. So I do think that dips are probably still buyable as long as this kind of consolidation trend has hold. But if there are moves up into this area, that's where I'm really looking to start booking some more profits, and maybe even starting to layer into some shorts, dare we say. Fed day ranges I've discussed in past videos, but with regard to SPY, the 12-14 high of day was 22. You might want to write this down. 228.34. The low of day was 225.37. I don't really see the market getting itself into really a lot of trouble until the 225 strike really gives way and cannot hold. Below there, to me, I think we could see a much larger break in the market. The 2-1 Fed day range was 228.59, sorry, and then the low was 226.94. So it's the Fed day ranges are very much overlapping. So those to me are the big keys in regard to SPY. Apple. So remember what I said about the Nasdaq being overstretched, getting to the upside. Look where Apple is. It's almost back to the old all-time high. And the 2 times range of the consolidation is 134. The old high is 134.54. It's possible that there's some kind of a punch through, but I do think, given that look where we kind of came up from the bottom, it's been in this long consolidation channel, and now we're punching through the high of the channel. I do think it's getting a little stretched. Short term, any pullback to retest the backside of the channel, I think the first go round is a buy, particularly, look, if it coincides with the gap day high. So I think that if there is some kind of a pullback in Apple, it'll probably coincide with like a 10-day, the high and the backside. It'll be a buy at least the first go round, I think. But I do think that it's probably a good idea to start booking some profits in Apple. They did have a very good quarter, but they are going to have to get through seasonally a couple of more quarters before the fourth quarter that aren't as stellar historically for Apple. Amazon is behaving a lot better than I thought it would. I thought that there'd be a lot of double top talk and that this could come down and maybe get the 50 MA and the channel low. It stopped at the start of the gap and is now filling the gap. So Amazon is looking pretty bullish, actually. My little concern with Amazon is a few things. One is it's kind of rolling over stochastically, so it's rallying on weakening stochastics. The money flow index, you could see, is perking up a bit, but it did get overbought here. And then there's some comments out of Bezos. He's been very vocally anti-Trump. And, whether or not you like the president or not, he could do a hell of a lot to hurt Amazon. There's been a lot of talk by retailers asking for increased internet taxes. I mean, if that stuff starts coming into Amazon, you could see Amazon stock get really walloped pretty good. So technically it's looking all right, but you might want to be a little bit careful, with some protection. There's always the possibility of waking up one day to regulations, which will not go well in Amazon land. You'd probably have some kind of one of these gaps here, and they could maybe continue. But short term, we're in a channel. We got to the mid channel, and it looks like it is going to come up, and short term may make new all-time highs. We'll see. If we were to lose this low here, the 803 and the 800, then I think we would see the channel low. But 50 MA, remember, was the kind of the scourge of the bounces. I'm fine with buying dips in Amazon as long as the 50 MA holds. Facebook, the 10 MA to me is going to be the key here. This had a look above and fail. This was the old uptrend line, and we're just riding it here. Let me zoom in. Facebook was really overbought going into the number. It had come down a lot and then rallied a lot. You have some dojis, some doji action. If you do clear this high, I do think that this will go a hell of a lot higher in Facebook, maybe even to the old progression lines for those that remember. And that could be closer to the high 144s, maybe 150s by the time we got there. I think that they are just the best at what they do. I am a little concerned about their growth rate slowing. And I'll say this, as long as we're above 133.5, I'm cool long. Below there to me gets more iffy. And below a 10-day, which look, supported here, all over here supported. If we start losing a 10-day, then I think this could come down to the kind of the range low, and we may even be looking for, I don't know where the 50 would be at that point, but maybe even a 50 MA test. So this is acting okay. I like that we're over these old reference highs, the 133.5. So 133.5 plus, I'm fine with long. Below these days lows here, though, I'm I would not be as cool with it. Twitter just stinking up the joint. That management is really spectacularly terrible. We lost this reference low here on a closing basis. So with that said, you have to think maybe the old all-time low is in play. If this were to disappoint and be like a look below and fail, I'm fine with a right or right out long above 16, which was this high of day, and then the stop would be below the low of day. So you'd be basically risking 50 cents maybe to play for a couple of bucks. So by stopping it over 16, I'm good with that. But anything below 15.69, the risk is probably lower, unfortunately. So you have to be real careful with that. Netflix looks like it's on course for new all-time highs. When don't you say that about Netflix? It's hard to say you have great trade location here, but anything above 143.46, you have to be thinking the channel high is in play, which is could be another $10 higher. Look at this channel I've drawn in. Just do it yourself and think like that. Anything back into this range to me gets a little bit more choppy. The 10-day here is roughly held. So the 10 and the 20 have held. So as long as those hold, I'm cool with buying dips. And this, to me, seems like it's going higher. If you lose those, then maybe there's a 50 MA touch, which to me would be a point to cover short, and then, again, to probably try and play long. Netflix just looks pretty good technically. Google got into some resistance, pulling back, and it's kind of looks like it's going to retest the old uptrend line, probably gets the gap fill, but the pattern looks really choppy to me, and I'm a little leery with Google as is right now. Microsoft, I was expecting there to be a bounce. I didn't think this was just going to completely collapse, but it is in a little bit of a bear flag mode. 10-day MA here is the key. This was a gap above the old channel that failed and it sold off. I think if you get below the 50 MA, which look is we gapped up and like look, there's been a look belows and fails. Any closes below the 50 MA and from a lower high to me would be a heck of a short. So maybe for quite a ways. So I'm a little leery with Microsoft. Listen, this could just rally and keep going. Very possible, but I don't like this action. I think this has run a hell of a long way and could be due for a bit of a pullback. You have multi-day consolidation. I like this day's range as a gauge, and the 50 MA. So if you get above here, I wouldn't do anything. I mean, I'm not game really to chase this thing long, given the reaction it had on the earnings that it was just a gap up that completely collapsed. But if you are looking for more of a short, you do need to see this old swing low taken here, which was 62.75. So you could see this bounce if it's to a lower high, and then you lose that in the 50. It's probably going to come in to at least 100, and maybe it gets even a larger break. Sometimes these things really do take on a life of their own. So that's my scoop with Microsoft. I'm just a little bit leery with given the place it's run and what I've said also about the Nasdaq being a little bit overbought. NVIDIA was a big premium screw job, right? Didn't move nearly the amount it was supposed to, although it did go up after hours. It's still holding this kind of channel. The looks above have failed. You have kind of a double, maybe even a triple top here. I'll keep it simple, stupid, right? Below Friday's low is a right or right out short, probably for a play maybe to as low as the 50 MA. Above the high, I think this thing is just going to resume the kind of the ramp higher. I would love a much larger pullback in NVIDIA, truth be told, to buy this as a longer term play. But yeah, the Friday range is the key. Below the low is short, above the high is long. Keep it simple, stupid. Qualcomm, another one of these, this has been poleaxed. It's down to the 61.8, and it's starting to maybe show some signs of life. I'm fine above Friday's high. 54.28 is a long, maybe for even a play to test the gap. Below the low, though, of 52.93, it's a GTFO. This thing could, believe it or not, this thing could even come down and test back into the 40s. So it's moved a lot. It's moved a lot. It's at an area where it kind of needs to hold. The gap range, this 53.77, if you're going to play long, anything below there to me would be now I think a stop out if you're particularly on a closing basis. So Qualcomm could be getting a bit of a bounce. It's got a nice dividend, but I'm a little leery. Tesla wow, this thing is broken the triangle, and it did consolidate here, so it's not as overbought as it once was. Let me zoom in a little bit longer term here. There's cases to be made that this is just a big range in the stock. You have 2 days worth of gap here that it's held. So I've said before 265 is a big level. This run here was $128.29. So far, we've only done $92.99. If you're to project that all the way up, that could mean a test into the channel high. That's at least 306.48 if you were to project that move higher. So it is possible that Tesla is going to make a new all-time high. If you're looking for a quick short, below this 2-day low is that short. I think you'd get a pullback to at least the trend line. This consolidated a lot here and is now busting up. It seems to me that the pattern in this is flipping quite a bit, and I do expect it to make a new all-time high this year. I just don't know that it's going to be this go. I don't know that it won't be, but I'll tell you this. The more this keeps ramping into the earnings, it's either going to be a pullback on the earnings or a gap and a pop and flop more likely. So I'm a little leery. I do think it's still a buy the dip, but I do think that selling rallies into the old all-time highs and into the 306s probably makes sense. You probably can maybe sell some iron condors or maybe strangles or whatever. Short term, above the 2-day high, I still like long. I think it still goes. Below the lows, I like for a right or right out short for a pullback to trend. So that's the Tesla. Nike breaking trend, looking a little bit better here. Impressive price action, breaking up. It's run a bit. This was looking kind of bow-wowish, but as long as this 200 MA holds on pullbacks, I'm okay with long for a pullback. This punched out. I wouldn't be surprised to see a retest of the breakout, but as long as that 5409 holds, I'm cool with being long on dips. Skechers also showing some signs of life. This is like a professional gap, right? I mean, it actually did close slightly above this last high, and the 200 MA moves over that have been unsustainable. So we're going to have to see how this plays out. This was the big gap down, and 27.39 was the start of the gap. We had a look in that failed, and it met with a pretty violent pullback, and now we're looking in again. I don't know if that's going to be as much resistance as it was the first time, so I'm kind of okay long this as long as the 200 MA and the breakout holds. So that's my thought with regard to Skechers. You could, if you want to buy stop at anything above 28.5, should keep going to, I would think, maybe even 31s. That would be the measured move range. This move here projected higher. So I do think Skechers could continue a little bit more. Under Armour, I wasn't planning on discussing this, but there's a secondary trend here. Primary trend is a heck of a lot lower, down closer to 14. But look at this. This is the big 61.8. Sometimes the 61.8 doesn't catch it immediately. But you have a secondary trend. You just had to look into the gap that failed. If you get back above that again, I think it's a right or right out long for maybe even a gap fill play. Below this, like look here, I drew in this channel, and the channel low coincided with the 61.8 and the secondary trend roughly. So I do think that this could bounce a little. This could bounce, but I'm a little leery if this really starts losing these lows. So I'm okay long, trying for a right or right out play, with a stop below this like 20.45. The low isn't poor. I would have liked to have seen like a look below with a hammer, but it didn't, and it's rejecting up. So I do like long, but with a stop below that low. So you're risking about $1 or so in the Under Armour. Other ones that have done this are like Deckers. Look at this. This had the look below the primary trend, and it failed, and it came back up. I don't know how much more this has in it because it's getting close to the gap fill on the breakdown area, but I'm just trying to show that longer-term trends have given a little and then have bounced higher. Kind of the same thing with this FFIV. I'm just going to show this as an example. This was in a downtrend. It gapped down to it and went back up. So FFIV is probably not as good of an example of that, but the other one was the Deckers. Whole Foods. this is one that has been a perpetual bow wow stock, but it has found a bit of a consolidation following. It gapped down on cruddy numbers, and it spent the entire day rallying, and it never took out the prior day's low. We did get to the downtrend line here, which should not be green. It should be yeller. And we have a bit of a doji and a stall at the 200 MA. So I have some short puts on in this thing. I think it's building a longer-term consolidation base here for a while. If we were to lose the low of 2870, the kind of the earnings day low, I'd probably stop out of it. But it seems to me like this could consolidate and work a little bit higher. We'll have to see. The 50 and the 100 MA held it. If you want a quick try of a short, you could probably try below the Friday low, but I think that this is really honestly just going to be chopped for a while, and that's why I prefer the puts. Restoration Hardware is a bow wow. I actually have tried long here. I may get stopped out of it. What got me long was this. You had this gap down, a higher low, double hammers, and then it took out the high of the day, which is what got me in. It did here now stop at the, let me delete this, I don't need this drawing. It did stop at the 10-day MA, and then it had a move down. This was on this was crazy. This was on a Buckingham downgrade, I believe, and they downgraded the stock in the 20s and still have a $42 price target on it. What the heck are they doing? I mean, why would you downgrade a stock and it's $20 below your price target? It, to me, makes no sense. So I will abide by the law here, though. If we do lose these two, the pullback low and the 24.40, I'll just get out of it. I really, this was just kind of fishing for a bottom. Listen, this could see all the way down to $20, but I just saw this pattern 9 times, or I don't know the exact percentage, but more often than not, and when you take out tweezers or double hammers like this, there's a move higher. This could be the one that doesn't work, and, whatever. I've seen this pattern so many times, and for all the times I've taken it and it's worked, for the 1 or 2 times it doesn't, I'm all right. Friday's range. Let's get to that. Below the low, I like as a stop out. You could even try short. Above the high, though, 26.26, I would add to the long, because this to me would be very, very bullish. And I would buy stop it over, you can see I have my alert in. I'd add to the position. I'd probably double it above that high. So that's the Restoration Hardware. YELP getting yoked. This double top here, right to this old kind of important area. I like YELP lower. You have a 200 MA here, which was where it gapped over. So this could be some support along with secondary trend. If that fails, then we could be looking at this whole range low. This could just be one big range, and that would be the more primary trend. Look, I did it from this kind of pullback low. So these are 2 points that if you're playing short, number one, this would be areas to cover, maybe cover some, or to try right or right out long. If this were to do some kind of a much larger pullback into fill the whole gap or get close to there, I'd be an out of the money put seller. So YELP to me looks like it's probably got more pullback to go, but it may start trying to catch itself soon at one of these trend lines, depending on how you draw it in. And this 200 MA here to me would be an interesting spot for at least for a right or right out trade. Expedia was all over the place in after hours. It has a big kind of range. I'll keep it simple. Long above the high for a move higher. Short below the low for a continued pullback and likely gap fill. Priceline is not being shy. It took that news as positive. It was originally actually down a lot, and then it went up higher. I think that this may want to see the channel high in the 1.618 Fibonacci extension. Almost close to 1800. If you were to be below Friday's range on Monday, like if there was a gap down or some kind of a move lower, this would have been a look above and fail, and you'll probably get a pretty severe pullback, maybe even to the 100 MA. So as long as Friday's low holds, it's probably okay. Above the high, it's just gonna keep on chugging. If this does run up hard into the number, it might be a good idea to take profits or maybe even try a right or right out short. We'll see how far that moves, though. JPM, very interesting here, consolidating. You have a range. If you were to break the range, if you 2 times it, it roughly gets you the primary trend and the gap fill. If you were to break it to the upside, it gets you to 93.32. Longer term, 1.618 fib is close to a hundo. So I think if this range broke, you'd be looking for a slow grind to 100. Yeah, it may take a while. It might not be pretty, but this could be in an up channel. Look, it's kind of riding the 50 MA, and as long as the 50 MA holds, I'm cool with long. If you lose the 50, it's probably a good idea to stop. You'll kind of hear the similar kind of an analysis for me in Goldman Sachs. Look, remember when I said when you break out of a channel, often you chest back to the backside of it before a bounce? It did. The first time is always a long. The second time, I can't tell you if it is or it isn't. It's a $20.72 range. If that broke, you'd basically get the gap fill. If it went to the upside, that is roughly the 1.618 Fibonacci extension up to the 268s. So, yeah, I mean, it's basically an exact move. So anything over the 247.77, I like long for an articulation of 20 points higher. And if you lose the low here again, I think you'll fill the gap. And I mean, this could even really get going to the down. I mean, could get a primary trend touch. I don't know that that's going to be the case. It seems to me that these fins are pretty bullish, right? The 50, look at this, the 200 and the 100 MA were big support, so that's roughly at the gap fill. It probably just does the measured move. Ameritrade, one I had been really bullish on. I said I thought we'd see the 47s, and we did, but there's something going on here. Schwab is cutting their prices, and this was what caused this gap down. I'm a little leery of this one. I actually put on a not because I'm longer term bearish, but just because I think it ran a lot and it got my price target. I have a very small size put spread on, looking for just a pullback to the trend and the breakouts, which I think would actually be really healthy for the stock. So if you lose this low, I might add to it the 40.93. If we start getting above, we did have a bit of a look above here, the consolidation high. I was actually going to stop out of this Friday if it closed above 42.82, but we didn't. So, yeah, if we start getting above the 50, I'd probably stop out of that. One of the things that I think has me a little, these all look the same, by the way, E-Trade, gap down. This one actually has had now 2 look above and fails on the 50 MA, so you probably could play for a quick long above the 2-day high for the gap fill, and below the low, I think you could play short. The low of those 2 days is 35.22. The Schwab itself, this is something interesting. Like Ameritrade got the 1.618 Fibonacci extension. If you took this range and you double it up, it's stalled right there. So this could be also on a course for a retest of the breakout and maybe to trend. Also stumbling around the 50 MA. So these lows, I mean, if you lose these, look at this low here, this 39.14, and this is 39.03. If you lose 39s, this should really tank for like at least $3, $3 to $4. I might actually put that trade in a short below the 39s after I finish this video. Anyway, that's my story. I'm sticking to it. If you liked it, hit the thumbs up. Please leave me some comments. Your comments help me make the videos better. If you like it, please favorite it and retweet it on Twitter. That is always the best way to say thank you. Have a great weekend, and I will see you either on Wednesday or Thursday for Periscope. Cheers.